All right. So we are going to look at the technical aspect of it, or the top-down analysis. Okay, we're going to look at the top-down analysis or the technical aspect of it. What is the chart doing? What's the direction so far? We've looked at the fundamentals and we said, fundamentally speaking, we are into the bear phase, or the a phase characterized by general fall in prices. Okay, and these are multi-month sales. I'm not talking about sales or for the next day or sales for the next month, but I'm talking about 10 months to 12 months duration of sales. Realize that from the fundamentals, fundamentally speaking, we entered that phase of falling prices on the 10th of November 2025. Okay, and literally we are almost reaching 2 months into the bear phase, which means we are most likely by October, and that's a hack, most likely in October, we're going to have these multi-month sales done. Okay, most likely, I'm saying most likely, this is not financial advice, but most likely in the October of this month, October 2026, most likely we're gonna have this BS phase end. So, which means we at time bomb. We need to really know when we begin those month sales if we are to make the best out of this. All right. So let's try to read the technical analysis. Let's try to look at the top-down analysis. Like we know, when you're doing top-down, it's important that you begin from the 12 months time frame all the way down to the weekly, down to the daily, down to the 4 hour. So what's the 12 months saying? So from the 12 months, we can see higher high, higher low, higher high, higher low. So literally, on the 12 months time frame, we are buying can see a series of higher highs and higher lows. But most important to note here is that on here, we had a break of structure here, and we have this impulsive candle right here. So literally, in most cases, when you see that this impulsive candle, it's a sign that the market is most likely not going to utilize a trading zone on there, but it's going to utilize the 50% of the impulsive candle right here. So in most cases, but I'm not saying always, but in most cases. Now, of course, you can use whatever trading strategy that you use, that you use for you to be able to trade. We are trying to read the direction just here. So right there, most likely, we may not push all the way down here, but just utilize 50%, which is a fair price at that point, and we continue upwards. So on the 12 months, the market is buying higher highs, higher lows, and we have an impulsive candle here, which market might respect 50% of it and then fries. Okay. All right. So that's the 12 months we are buying, and that's all we need to know. And then when it comes to the 6-month time frame, let's go there and see what we have. Sorry. On the 6-month time frame, this is what we have. Okay. This is what we have right here. Can get rid of this. Okay, just a moment. Okay, so on the 6-month time frame right here, can see we also have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and some resistance here before the market broke structure, which means, and it's in line with our 50% of the impulsive candle on the 12 months right here. So literally, we are in the same line, almost on the same line. But on the 6 months, we can see the market is buying. 3 months time frame, what do we see? On the 3 months time frame, we have got also higher highs, higher lows. Can see right here, higher highs, higher lows, higher highs, higher lows. But technically speaking, right here, we've got a concept that we teach deeply in one of our courses at Traders Gate. Can browse us, reach us out, and then scroll through the mentorship section, and you'll see the different packages that we offer. But right here, we have got a concept, double areas of double trading areas right here. So literally, when you see this, most likely the market is most likely gonna utilize the second zone. So you have to be very careful there, but most likely the market, in most cases, will utilize the second zone before pushing, getting enough momentum to push all the way upwards. You get a point? So this is on the 3-month time frame, the market is buying, but currently it is trying to retrace, which means we need to go to the monthly and see what is happening in that retracement. So on the monthly time frame, you can see the market is pushing higher highs, higher lows, higher highs, higher lows, and there is something very important that it created here before moving downwards. This right here, okay? Right here. Very, very important, very important concept, aggressive sellers right here. So every time you see, so what happened here? We were pushing, we were making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then the market failed to break a higher high and sold. So this is what we call aggressive sellers, okay? Aggressive sellers. A point or a selling point of interest created before the market taking out a higher low right here. So the market has not yet shifted to sales, or has not yet shifted, but it has created a selling point of interest right here. So what does that mean? In most cases, when you see this for me, chances are high that the market is going to sweep below. It's going to sweep below the next higher low right there. In most cases, can backtest that and see how it works. Now, you can use any of your concepts, any of your trading strategies to be able to demystify. Now, why is this very important? Because at the time of recording here, many people are expecting BTC to respect this zone. Yes, it may respect it, but because of what it created right here on the monthly, chances are high that this low is going to be taken out. So we may see retracement happening, and then we get a good entry for the multi-month sales, and then see the market come back to this trading zone before we enter into the recovery phase. So that's the monthly. On the monthly, the market is buying, but it has got this aggressive sellers point of interest, which is very important in our understanding of the market likelihood of sweeping out this lower low, higher low instead, which further confirms these points of interest that we got on the 12 months and also on the 3 months. Okay, so most likely we may see price pushing all the way down here before entering the recovery phase. So you may see the market pushing as far as down here in the range of 50,000 before entering in the recovery phase. So that's the monthly, which means we need to go ahead and examine. So monthly is still buying, even though it has got aggressive sellers, but has not taken out this, it has not shifted, which means we need to go to the weekly and find out what is happening there on the weekly. Okay, on the weekly. So in the weekly time frame, this is what we have. On the weekly, this is what we have. So on the weekly, the market was buying right here, buying higher low, higher high, sorry, higher high, higher low, higher high, higher low, higher high, and then the market failed, came back to this trading zone right here, but failed to cross beyond this higher high, further confirming that it was going to sweep below the next higher low. So here we had some points of interest here. We took some sales right here, and then the market came as expected and swept below this low. And swept below this low right here. So we had the market on the weekly, market took out its own higher low, which indicated that It is selling. So on the weekly, the market shifted from buys right from the time we had the bull run started. It is here that the market shifted. So on the weekly, the market is indicating sales. Remember, we are in the bear phase fundamentally, and weekly is enough higher time frame, is a time frame big enough to initiate those month sales. So now that fundamentally speaking, we are in a bear phase, a phase of falling prices. When you combine that to what the technicals on the weekly and also on the monthly are reporting, it further confirms that truly we are yet to see a season or a period of month sales right there. So let's first exit this. Okay, so right here, we are seeing the market trying to push down. So on the weekly, right here, using any of your strategies that you use, we have shifted to sales. But like I say, we already in the bull phase, in the bear phase, which was initiated on 10th of November 2025, which means that most likely, right here, we see a point of interest whereby the buyers, sellers, we had a lot of buyer-seller interaction in this area on the weekly. So usually, in most cases, I want to see such a point of interest, especially on the higher time frame, monthly or weekly, a point where we had a lot of buyer-seller interaction. And eventually, the sellers managed to push price below. That's the point of interest that I usually like to initiate my month or multi-week sales from or multi-week buys from. If it is buying, I literally want to see a point where we have a lot of buyer-seller interaction and then before buyers taking control. If it is selling, I want to see a point where we have a lot of buyer-seller interaction before sellers taking control. So when you look at that point, this point here, we had a lot of buyer-seller interaction in this area, and eventually we see sellers taking control right here at this point. See that? In this point is when we saw buyers taking control. So on the weekly, the market is selling, shifted from buys to sales. And most likely, we may see the market pushing back to that point of interest before entering those month sales. So you take note. So let's look at the daily and see what is happening. Perhaps daily has something to offer. Of course, we had some good sales that we took right here. The market right here on the daily, see that as it was pushing, it eventually took out its own high and created a bearish break of structure right there. So using this point of interest, we're able to capture these sales confirmed, and then the market swept down, again broke structure, you can see, and then has been breaking structure, now coming to the current price right here. So you have to understand something. When you're reading direction, know that usually the market hates all the data. So try as much as possible, unless it's necessary, to avoid odd data. That's what is happening on the monthly. If you go back to the monthly time frame, that's what's happening. Many people are expecting this point of, which is true, because this is virgin enough, to hold the buys back to this point of interest, ignoring the aggressive sellers that were created there, and also, most importantly, ignoring the fundamentals, the phase of the market currently. Okay, so this combined, it's important for us to look, it's more important to look for sales than long-term buys, especially I'm talking about long-term. So reading the daily, let's go back to our daily time frame. On the daily, we had sellers coming in, lower lows, you can see lower highs, lower lows. Here we took out a higher low, and then we shifted it to sales, took some sales here, very important, and the market pushed. So we have buyer-seller interaction here, market came back, respected it, then fried down here. So it was literally selling strongly to the downside. And right here, we had the 2 points of interest, two zones, and then the market came in this first respected this zone, sold for some time. And you can see currently what is controlling the daily is still in sales, because we have not taken out, we failed to take out. Let's go back. Can see on the daily, we failed to take out this higher high, okay, rather lower high right here. You have not yet had a candle closure above. So what we're trying to do here, the market utilized this point of interest, gave us confirmed, and then fly down. Now what's happening right here, the daily is selling, but along the way, before getting these confirmed sells right here, the market created this aggressive point of interest, the aggressive buyers. And currently, the market is trying to utilize these aggressive buyers right here to push the market up. So it's these aggressive buyers we created this point of interest that are trying to hold these buys that are happening here. When you go on the forward time frame, okay, when you go on the forward time frame, what is happening on the forward time frame? On the forward time frame, we have higher lows right here, rather lower high, lower low, lower high, lower low right here, and then aggressive buyers coming in, aggressive buyers right here, aggressive buyers. You can see the internal break of structure to the upside, internal break of structure, internal break of structure, internal break of structure to the upside. And when you go back to the daily, you realize that this retracement, literally on the 4-time frame rather, on the 4-time frame, captured those buys right there, though they were risk buys, but we had a lot of buyer-seller interaction right here, if you notice. We had a lot of buyer-seller interaction right here in this area. Buyers trying to push price, being rejected by sellers, being rejected by sellers, being rejected, and eventually the buyers managed to push price strongly up, breaking structure or breaking this resistance area, leaving behind. That point always becomes becomes like a magnet where the market usually comes back and respects and flies. So here we had buyers holding price there, so the market came and then gave us confirmed entries right here that are trying to hold these buys right here. So here on the 1 hour time frame, if you go back on the 1 hour, okay, on the 1 hour or 30-minute time frame, realize that we had something very important right there. On the 1 hour, we had a break of structure right there. Then we had this internal break of structure. Some people call them side formations right here. Before the market shifting, taking out a lower high right there, we had this inside formation that was created, which literally represents a high concentration of liquidity. If those concepts which look at the flow or what we call liquidity conveying, if you've taken time to understand that, inside these inside formations or those structures, inside the structures that are created before break of structure, they have got the highest concentration of liquidity. So we saw the market flying and then coming back and respect this point of interest. Just we had some manipulation little, and then the market started to fly up all the way up here, holding this current buys right here. So what is currently happening is that the market is in the retracement phase. On the daily, we are still into buys. What is so far controlling these buys? Rather, in the daily, we are so far still in the sells. But what's controlling these buys is the 4-hour time frame right now, okay? Because the 4-hour time frame shifted right here, took out a lower high right here. You can see these lower highs being taken out right here. If you turn on the line chart, you will see what I'm trying to mean. You can see here, we had this lower high taken out, okay? We had candle closures beyond this lower high. So it is this point of interest on the H4 that is responsible for holding these buys. But on the daily, we are still bearish. You get a point? We are still bearish. If we manage to break beyond, if you manage to get candle closures above this lower high, okay, on the daily, it means that we shall have shifted to buys on the daily. And those daily, if we shift to buys on the daily, it literally means we are most likely gonna have price pushed up all the way to our point of interest, where most likely we're gonna have the origin of the multi-month sales of the bear cycle. And most importantly, what I'm trying to watch this point of interest on the daily right here. This point of interest where we had a lot of buyer-seller interaction before sellers taking control, and you can protect anywhere up here. So I'm closely watching this area for initiating those multi-month sales. But before that, looking at the current market structure, it's important for you to be confident in we took some buys right here, but for you to be more confident of this retracement back towards this area, we need to see the daily first shifting to buys. At the moment, it is only H4 that is trying to hold these buys, okay? So it's important that for you wait for the daily to shift back to buys so we can utilize the points of interest that are created, riding all the way back here. But when the market reaches anyway around this area, you have to be very, very, very careful, because literally we may have price pushing from there and entering the multi-month sales of the bear cycle all the way down to 50K, around 50K thousand, which I expect by October of this year, we might see ourselves on BTC down to the 50K mark. All right, so that's all I can have for you. The H4 reading that at the currently on the 1 hour, if you check the 1 hour time frame currently, maybe lastly, you can read there on the 1 hour time frame. So we took some good sales right here on the daily. Okay, took some good sales on the daily here. As we're waiting, we had some good sales right here on the daily. Okay, this sell right here, it was a confirmed one, which came down and triggered this entry for the buys, confirmed buys on the H4. And then right here, we had H4, some H4s controlling right here. Let's get rid of this. So right here, you can see here we had lower high, lower low, lower high, lower low right here. So we had breakout structure here, the downside, and we need to, this was the higher high, higher low, right? Actually, it's here, right here. Okay, this is just an internal structure. So currently, you can see that H4 has again reshifted strongly to the buys, which means that for you to initiate the sales, okay, on the lower time frame for intraday purposes, you need to see H4 shifting back to sales. But at the moment, you can look for buy continuation since H4 has already commanded those buys. In here also, as we had this higher low being taken out, and the market shifted to buys, leaving us with a point of interest, which the market came back to right here. Gave us a confirmed right here, then started flying. So, but technically speaking, looking at a clear break-off structure, we had it just right now, where we had H4 shifting strongly back to buys, which means right now, we can look for buys on H1, on the M30, on the M15, until the H4 shifts back to sales. Of course, we go deeper into how to read the market direction very, very deeply in both of our courses. They are really very important for you to build a career, especially in trading. So we go deeper into how to read market direction, but this is what we can have for you. This is what we plan for you in this session. We've looked at the fundamental aspect of it, we've looked at the technical aspect of it, and helped you guys at least understand the phase, most importantly, in which we are in, so you can you can tailor your strategies accordingly and see how you can initiate those positions better. Okay, but you have to keep watch. You must keep an eye on this in this area. Okay, on this area. Very important. You must keep an eye on this area around the 104 mark. On the daily, this area, you have to take note. Okay, you have to take note. Don't expect, unless otherwise, but don't expect the market to push all the way up there since we're already in a bear cycle. That's very, very important. That's a take home from this session. And also, you must get better at, and if you're an intraday trader, get better at reading the direction of the market, which time frame is controlling. And like I said in one of the posts, that one of the most underrated aspect of trading is time frame coordination. You need to know how time frames coordinate. And for such and more information, please visit our website, www.tradersgate.com. Most importantly, visit our Telegram group and be part of the community. Okay, be part of the community. So with that, see you in the next video. Thank you so much for tuning in. Bye-bye.